Now, gone are those days when you have to pay a fixed premium every year for your motor insurance policy. You can now buy a motor insurance policy that charges you a premium which is based on your driving behavior. This is because the Insurance Regulatory and Development Authority of India has permitted general insurance companies to now launch telematics-based motor insurance covers such as pay as you drive, pay how you drive. Let's get into the details of the new auto insurance rule. Joining me now is Animesh Das, Senior Director, Motor Underwriting at ACKO. Animesh, for the benefit of our viewers, please explain in simple terms, what is the new IRDAI norms? What are they?
So I think before this circular, most of the customers or the product which are being offered from the insurance company, those were irrespective of the kilometers you drive and the kind of driving you do, right? So if you're a good driver or a bad driver, in both the cases, you were getting exactly the same premium. And if, let's say, if you're driving 10 kilometers a day to your office, or you're driving 5 kilometers a day on a daily basis, or you're not using your car at all, right? So all these kind of users were getting almost the same pricing for their insurance premium. Now with this new circular, IRDAI has given an option for all insurance company to charge different premium to the user depending on how many kilometers do they drive on a daily basis, or depending on the kind of driver they are, right? So if they're good driver, logically they should get better pricing or lower pricing, and if they're a bad driver, logically they'll get a slightly higher pricing than an average. So this is what the circular covers. There's one more aspect. The second aspect is the floater policy for car and bike. So how does that work is that typically, let's say if I'm a customer who has both a car and a bike, in this case, I used to get different premium, different premium for both those vehicles. But now IRDAI has allowed all the insurance company to club these two products and give a floater policy, which will cover both the vehicles, right? So that will again reduce the premium for the customer, because if I have two vehicles, typically I'll be using one vehicle at a time for most of the average cases. So in that case, this will also help the user to get a lower premium from the insurance company and actually manage their policy in a single paper itself, right? So that's what the new circular actually covers for the users.
And what is the impact likely going to be? Will the cost go up for bad drivers and go down probably for good drivers?
Yeah, logically, yes. What will happen is that for the good drivers who actually have a better driving behavior, they follow more traffic signals, they don't end up meeting an accident, those users will obviously have slightly better pricing or better premium for them. The bad drivers are slightly going to get penalized, and they'll have to pay slightly higher charges. Same is applicable for on the basis of usage as well. If I'm someone who works from home, right, which is actually a decent use case now given post-COVID scenarios in India. Most of good number of people actually work from their home, right? And if they're not using their car much, then they should get that benefit, and this circular allow the users to actually get those benefits. So the premium will go down for good users, and the users who are not driving much, the premium will go up for the users who actually are bad drivers.